While Canaccord analyst George Gianarikas is bullish on Tesla's long-term prospects, they're also at the same time being very cautious of a near-term growth slowdown. Greatest line in the most recent note that they just dropped, he says, "We think Tesla is Apple on steroids as it focuses on manufacturing and a higher level of vertical integration." They continue to maintain a buy rating on the stock with a price target of $267. Today, we've got Brian White joining us. He has an amazing YouTube channel called MyTeslaWeekend, just does deep dives and the knowledge and just a great presentation. Brian, love you. Thank you for joining me.
I love you too, buddy. Thanks for having me on. What a busy week. What an amazing year. And we're into 2024. When did that happen? I'm still writing 1997 on my checks.
I love you, Brian. Yeah. It happened 2 days ago, dude. Okay, let's keep going here. So Canaccord Genuity, so they are one of the analysts that follows Tesla, and they put out their new note. And, basically the punchline is, hey, they're still a buy rating at 267 though. So they're still very low in terms of their expectations for the stock. And they explain why. So here's their note. They say, "We are quite bullish on Tesla's long-term growth prospects. We see vehicle autonomy as one of the highest value creating technologies to be deployed ever." So here's an analyst, another one. This is happening more and more, of course. They're now referring to Tesla and recognizing that autonomy is a real deal and it's coming. And they basically just, recognize it is there. And Tesla, with its razor blade approach, is a leader in this real world AI. Again, they're talking AI. "We think Tesla is Apple on steroids as it focuses on manufacturing and a higher level of vertical integration. Tesla is the sustainability behemoth in our opinion." Oh, and I love the Cybertruck. Let me pause there quickly. What do you think about this statement here, Brian?
Well, which part of it? That's a lot to unpack. The razor blade approach, does that mean the vertical integration part? Because if so, I get it. And I think it's confusing to me. If you're going to tell me that I believe Tesla's autonomy is on the path, and also the stock is worth 6% more, that's very strange to me. I believe that if autonomy is solved in the near to medium term, it will add more than $6 of value to the stock. So I guess I'm a little more bullish than they are. 6%, I mean.
Yeah, exactly. So of course they're very careful about their projections, and then it's like, when does this happen? So it's always this thing. They're leaders. It's going to happen, but not going to happen next year. So let's keep the stock. But like you said, stock market is forward-looking. At some point,
yeah, and I would say that the targets that these guys put out, and I can't speak for Canaccord specifically, but all of them feel like dartboard numbers. We've seen companies where they don't change their rating, don't change their position, but do change their price target because, we were at 190 and it's been trading over 225 for so long. We're going to change ours to 220. Why? What's changed? Well, just the market. You guys don't know what you're doing.
Exactly. You're correct. Okay, so we're going to actually watch a video of him being interviewed and some of his comments about Tesla. In the meantime, let's continue on with his note. This is what he says. "The stock had a strong 2023 despite a significant reduction in earnings estimates. And now, as we stare at 2024, we wonder, are already lowered estimates for 24 and 25 low enough? Are margins ready to bounce back in a big way?" So they're concerned that the margins may actually be cut. "As we enter a growth pause, what will drive stock now? What can drive earnings upside or additional excitement after the upcoming growth slowdown? We awaited an interesting earnings call. We'll tell you the answer then." So they're just being very cautious about, they think the growth has come down. And then this is Gary Black. And he said, this is what I interpreted what they just said. Paraphrase, "We like the company's products, but the high PE and possibility of further earnings declines keeps us from loving the stock." Any comments?
Yes, I get all that. I get it all. Let's talk about the margins for a second. I understand their concern, and if I didn't follow Tesla closely, it would sound right to me. I was concerned about margins for Model 3. We knew that before the refresh, it cost about as much, maybe even slightly more to build than the Model Y, and does not command the same price. That's not a great situation to be in. It's almost like you need to redesign and rebuild the car and get your margins back up. Oh yeah, they did that. Less concerned about the Model 3 than I was a year ago. Model Y, well, it's, they've made some improvements. They've got huge economies of scale. Certainly, that's keeping the price reasonable. But as you saturate the market, you're going to have some price reductions. It's almost like in the next year or two, you're going to need to figure out a way to build them cheaper and sell them for more, which we know they're doing. S and X, they do not have the brand new car margin that they had a year ago. We didn't expect them to keep those prices that high for forever, but the margin is still substantial. What's not substantial is the volume. And then you've got Cybertruck. The margin today is likely already positive because they're selling them for so much more than they expected. And the wait list, even at these prices, is many months long. They're going to continue reducing costs there, and they will adjust the price downward as it makes sense for quite some time. This will remain a high margin vehicle as soon as we know it's positive, it's going to be a good margin vehicle. So the margins I am much less concerned with. Maybe certainly for Q4, fair concern. Q1, reasonable concern, but much past Q2 or 3 of this year, the margins I think are going to be good, and we may see rates begin to normalize a bit. Interest rates normalizing increases buying power. Consumers are less freaked out because people don't always buy a car, they buy a payment. And that's an obstacle people like Neo are facing when they say, hey, our car is slightly cheaper. Oh, and the battery's $200 a month. It's not affordable at that point. It doesn't matter what the sticker price is. It matters what people can actually afford.
Yeah. So a couple great points there. Interest rates are going to fall next year. When that does, we're back to growth. And by the way, everybody's already understanding that Tesla is continuing to grow. It's the other EV markets that are falling, but most analysts are saying that Tesla are recognizing that that is still growing. Actually, I actually find this note to be perfect. Perfect. Because I actually want them to have low margins, low expectations, and then we can surprise them on the upside later. But more importantly, I want them to recognize Tesla not just a car company, which they are. They're talking about autonomy, they're talking about AI. These were things that they would never have mentioned 6 months ago, a year ago. And now almost every analyst will start talking about it. These are things that take time to move, and here we are. So let's watch some video and let's listen to him and his answer to China and BYD versus Tesla.
Reports it's preparing to launch a revamped version of the Model Y from its Shanghai plant. Street also expecting Tesla to report record deliveries in its earnings report in just about a month. But it may not be enough to keep Tesla on top, as Chinese automaker and Berkshire favorite BYD is reportedly on track to surpass Tesla any day now as the global EV sales leader. Joining me now with what that means for Musk & Co. is Canaccord Genuity's George Giannarakis. George, it's great to see you again. Welcome.
Thanks for having me on, and happy holidays.
I'd love you to tell us what you think about BYD. I mean, do you think they are more innovative, more disruptive, quicker to respond? You know, are they the new Toyota of the 1980s? And how big a deal is this potential crown they're about to take?
You know, it's a great question. And like people say, history doesn't repeat, but it rhymes. And so we've talked a lot about Tesla being the new Apple. And when the smartphone industry first started, you know, Apple kind of had 100% market share because they were the first one to market with a true smartphone. It's the same thing for Tesla. As the market matures and the EV pie grows, Asian competition came into the smartphone market. Same thing is happening into the EV market. And eventually, you know, Tesla will likely be overtaken from a unit perspective. But what's most important, and we think Tesla will win over time, is the profit share battle. But look, today, Apple doesn't have the most unit market share in smartphones, but it overwhelms the market in terms of profit share. And we think ultimately that will be what's most important for Tesla, and we think that'll happen.
You have a buy rate.
So I love that, right? That's fantastic. So a couple of points. First of all, this interview happened a week ago, still very, very valid. And then two, Giannarakis. I probably know how to say his last name. It's Giannarakis. Okay, got it. So, you know, I love it, right? This is what we've been saying. I've been saying it quite a bit. Apple versus Android. It's not a big deal of all these volumes because they are in all these different segments and they're selling, you know, just like Android is, low price products. The difference is that Tesla's about to enter into the compact car low price segment, which Apple kind of did by just, you know, selling their older products. This is not the same. And so this Apple Android is perfect analogy, but it may not it may not turn out the way it's actually going to be better for Tesla over time. What's your thoughts? Yeah.
Plenty of thoughts on that. So calling BYD maybe this is the Toyota of the 80s. I love that. That's a remarkably insightful thought. So BYD is a price leader, a low price leader in China. Now, when they export cars, they're not price leaders anymore. They're right in the pack. If you look at the BYD cars for sale in outside of China, specifically in Europe, in the Western markets, once you increase the quality to the point that Western consumers would accept it, the fit and finish, the noise, vibration, and harshness, the safety standards, all of a sudden you have a car that's no longer half the price, a third of the price. It's now about the same price because remember, so little of what the car is labor. So you would expect that now that BYD has been in the European market for well over a year, probably 2 at this point, that they would be already dominating, and they barely show up in the figures. And it's not because consumers don't like BYD, it's because the value proposition isn't as good as some of the others on offer. So the idea that they're going to just steamroll into any market is misunderstands cars and manufacturing. If you look at the BYD, I don't remember if it's the Atto or the Seal. I think it's one of those. If you look at the Chinese version versus the European version, it's a different car. The wheelbase isn't the same. The overall length isn't the same. It looks like the same car. It is not the same car. So they're going to miss on that. You made a very good point that I love, which is, well, Apple did get into the low-end business, but they really didn't. That'd be like if Mercedes got into the low-end business by selling brand new 1990 Mercedes. That's not the same thing. That would just potentially water down the brand, and maybe for Apple it did. Tesla's looking to make something new, radical, that's its own thing. That's all its own thing. That's also affordable. And a lot of legacy companies don't even want to touch that segment. If they could get out of compacts completely, like the big 3 have, some of them would choose to do that. But you look at Honda, you look at Toyota, even Volkswagen, they can't get out of the compact business. It's too big of a part of their business. And for them, at least, it is still profitable. So I think there are ways the comparison works and ways it doesn't. But I liked your point on the Apple part.
Thanks. There we go. Let's keep watching.
Being on Tesla, $267 price target. But is Tesla making cars more profitably than BYD does? And do you expect that to continue?
What Tesla has to do, and so this year was the tale of Tesla cutting prices, impacting their gross margins. We think there was an intent to that, and that over time, they expect to sell a lot of full self-driving FSD software to people who already own their vehicles. That's a big key to the story because right now their profit margins have suffered, but we think that's with a long-term plan in place to sell FSD software the same way Apple sells services. And so ultimately we think it's through FSD software and through the vertical integration that Tesla's the best in the world at. It will ultimately result in higher than average gross margin and profits for their EVs relative to anyone in the marketplace. If
Tesla's infrastructure in manufacturing is leading edge, why have I read detailed profiles about how BYD's is better?
Look, BYD has some competitive advantages. They have a base that's purely in China. Tesla operates in the United States, in Europe, but Tesla's putting things together from a manufacturing perspective that are way beyond what other companies have done. I mean, they're building these molds in their vehicles for the Model Y, for example, this gigacasting that essentially breaks down a vehicle into only a few parts versus hundreds or even thousands before that. They're way ahead of the curve and ahead of their competition and learning how to manufacture efficiently at scale and innovating in places that other companies are just trying to catch up now.
But will they be hamstrung by the relatively limited number of models that they offer?
It's a great question. Look, ultimately, right now this year, they'll be in and around 1.8 million, about the same as BYD. We expect that to grow a lot in the future. We'll see what they say about 2024 on their earnings call. But we expect this company to be in the tens of millions of units over time. And I think they're planning the same. Look, when Tesla had an Analyst Day in March, they talked about removing some things from their production line, like rare earths, in order to make sure that they can scale up to this tens of millions of units. So that's their ultimate goal here. And when they get there and they're able to sell additional software to vehicles, we think that'll create a huge improvement in their gross margin profile over time.
I like this guy. He gets the story. Tesla is Apple on steroids. He gets that there's future margin play here. He knows that the manufacturing is completely different. You saw the image there of how many employees BYD has versus Tesla, and so people like to compare them. There is a very different kind of company. BYD is a battery-based company, lots of different kind of products, but at the end of the day, Tesla is just very efficient. You just need to look at Tesla alone and see what they're able to accomplish. What's your thoughts?
So first of all, what masterful diplomacy when she said, well, how come everything I'm reading? And what I would have said is, I can't control what you read. But so the big headline is BYD beats Tesla. And then some of them went a little farther and said in Q4. What none of the headlines said was exclusively in Q4. For 2023, Tesla still is the EV champ, but this isn't a fluke. BYD is not a flash in the pan. This wasn't just a good quarter where they just pushed out more units. They're here to stay. And anyone who's been following channels like yours or mine has known this for over a year. We've been talking about it. I've been watching for over a year. And about a year ago, I interviewed Sandy Munro and said, 10 years from now, who's number 2? And he said, BYD is the one to watch. If Tesla is number 1, BYD is number 2. And if Tesla's not number 1, it's because of BYD. So we've known about that. In terms of their margin, the important thing to note is their margin is positive. That's the only part that matters. If the margin is positive, they can continue growing. They do make cars people want in China and to a growing extent outside of China. They are considering building a plant in Mexico. If they have a North American plant, they can sell into the US and qualify for the tax credit. They do have to build the batteries in North America. Oh, wait, like you said, they are a huge battery manufacturer. A lot of people like to focus on, well, BYD's bloated headcount. If that's a concern, that's something they know how to address, or certainly will over the next few years. They could bring that headcount down while growing production, but a lot of the headcount is for other divisions. They are a huge battery manufacturer. They sell to everybody, including Tesla. And Tesla would like to be in that position like they are. So I did enjoy are they limited? Is Tesla limited by the models they have available? And the answer to some extent is going to be yes. But if you look at the biggest car companies, you will see on the list companies that Tesla has surpassed who make more models than Tesla, who have more choices. The choice alone isn't enough. Tesla said, we're going to do it different. We're going to make as many perfect cars as we can and sell those. And I think the order that they went in was very smart. The start with the luxury sedan. At the time, it was the only game in town. There was no other electric luxury sedan. There were cheap cars and there were city cars, but the S was on its own. The Model X, go a little higher up market, get something real fancy. Go with the Model 3, but the sedan is a dying form factor in the US. Well, sort of. The luxury sedan was not. It was a smart move. The Model Y, I'd have said skip the Model Y, go straight to the Cybertruck, go straight to a compact. Nope, this is where there's a bunch of money to be made. They know what they're doing. I don't know how to impress that upon people any more clearly than I can, but there's just a lot of room for growth. Tesla will have more models, and it will allow them to continue growing. But just with the models they have now, they can still expand the market by at least a whole pickup truck line, which is going to be a real saver in the next year and a half, 2 years, as the compact gets closer to production.
Thank you so much, Brian. Yeah. So this is a massive revolution. There's a complete changeover between ICE cars to electric vehicles. There's so much market share for all parties, many, many parties. You can have, dozens and dozens of Chinese automakers competing with Tesla, and they're not competing. They're not competing. They're competing against the ICE cars, and it's going to be a while before they actually butt heads and can't sell every car they can produce. And so really, there's no need to think about this. It's just fun to say, oh, who's the number one EV sales maker? And then are you counting even like the $5,000, $10,000 cars that they sell? Sure. Okay, let's do that. But yeah, this is going to be great for both parties. And what's sad is what's happening to the European and American companies. They're gone. They're pretty well gone. And if they are, somebody has to eat up their market share that they would have had anyways. And so there's just too much space here for us to worry about BYD or any other Chinese car companies. There's no need to worry.
And I would agree that these companies are not fighting each other. They're fighting everyone else. They are not, they don't have to be best friends. They are allies on the same side of the same battle. And that's what matters for consumers. That's what matters for consumers. And there's an endless room in the market for new players to come on and unseat the gasoline big dogs. And well, they should. One thing that we may see resurfacing is, but Elon laughed at BYD.
Yeah,
and I don't know if you saw that. That was like 12 years ago. He said, have you seen their cars?
Yeah.
And 12 years ago. So I went back and looked at their cars 12 years ago. Yeah, that was a laughable comparison. A Model S versus a 2012 BYD. Those were not comparable in any way. But BYD has absolutely earned their stripes. And to the people who think we're incapable of recognizing greatness beyond Tesla, I would ask them to watch this video. But they won't.
Yeah,
so.
It's all about a context, right? A 2012 EV market was so small. Nobody wanted to buy electric vehicles. You really have such a small market share there. Anybody who comes in and has their EV, you're competing with each other for that small little bit. And that's where he said, well, they're not a competition for now. So anyway, it's not a big deal because Elon has been saying the last several years, just very recently, it's the Chinese that they're the really ones we have to have a lot of respect for. The good news is we're going to do a show on what is the most American-made pickup truck in the world, and then what is the most Chinese-made vehicle in the world. Actually, Tesla.
I'm looking forward to it.
So we'll do that one. Okay, thanks you, Brian. Thank you, Brian. Follow Brian on his channel, MyTeslaWeekend. It is a fantastic channel with so many great videos there. Go check him out. See you soon, guys. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.